Welcome back to another gold weekly recap. Last week we had a recap of what we're expecting in price to do this week, which was for us to target these three swing points at the top. So we had this level, and this level, possibly that level also to be it, and possibly even this level. But those were like our three liquidity draws that we had marked from last week. You could refer back into the video or link it somewhere on the left hand side here. Should pop up. Now, this was our close on Friday. I'm going to drop down to 1 hour because 1 hour time frame is where the source is for gold. Now, if you notice something, and if you've seen the previous week video, we had this volume imbalance gap right there that we expected price to possibly drop into. We also had this order block here, which was the perfect place, which was the point, not perfect place, which was the point that we closed on Friday last week. So our premise going into this week was we have been able to navigate what the buyers was. If you watch the previous video, you'll see how we navigated the buyers, and price is now in a discount right here. So we're expecting that either this order block holds, so when we open on Sunday we move straight up, or we move lower into this volume imbalance, because we know that price likes to feel volume imbalance before we start to move up. As you can see, price when we opened on Sunday, this vertical line that we have here is Friday's close. So we opened on Sunday, you can see it, Sunday 6 p.m. opened, created this candle on the 1 hour, then this, and then we moved lower into that volume imbalance and started to expand back up. In doing that, we left three interesting things. One is this fair value gap right there. And we left this fair value gap right there. Seeing all this, at the time that we started to trade, we basically used the fact that this fair value gap had been respected to go for longs to move up. So if we drop down to 15 minutes, the first trade that we took was off the premise of this 1 hour fair value gap expanding off. So we ranged a bit in there, swept these relatively equal lows right there, and then created this expansion on 15 minutes. This was what gave us our confidence for upside, and we took one trade right in here, and our target was basically this high. We actually front run the high, but we were lucky enough to get out inside this range before this drop. And here is the reason why. Price had played a lot of consolidation in this place. So even though we were expecting us to at least sweep this liquidity right there, just going to mark it, what we did instead was create a failure swing. And if you look at this price action right there, what we have there is what we call a consolidation. When we have consolidation in prices like this, we have two things that are going to play next, which is manipulation, which is a fake expansion, which is what we had to the upside, and then a distribution, which is this move that we moved back down. And that distribution basically came back to fill the 1 hour fair value gap that we left behind when we opened in the market. So this trade was around 10 a.m. and you can see how we moved up and then came back down to the fair value gap on 1 hour that we had left there. So this was the trade that we caught, which is the move of this, and we came out there. We also posted this on my Discord, and also posted it on our Instagram page. So you have the executions there. That was the first trade that we took for Monday. Now moving on to Tuesday, you could see that price had come back into this 1 hour fair value gap. This is Tuesday right there. This is 12 midnight, and we created this expansion. What we basically needed to do was drop down to 15 minutes. It's the same process every time. Drop down to 15 minutes and then find the 15 minutes fair value gap that we're going to trade. I'm just going to take this out quickly. Right there, delete, so you can see other things clearly. And you see it right there. That's it. 15 minutes fair value gap right there. Tapped it and then made our move, and our target was basically these highs right there. That was the first entry that we made. For our students that were in the New York session, we also gave them another play, which was if you drop down back to the 1 hour, you will notice something else again. It's the same model we always trade. We are basically just doing the same thing. We had this 1 hour fair value gap here, right there. Right there. Drop down to 15 minutes. And that was the long. Our stops were below here and they went up to this high. And that was the second trade that was taken. But I mean, I didn't take that because I'd already taken this main trade up to this place and I was out. There was no point trying to do this. But that was also an opportunity that we had laid out for like the New York session, which we also outlined. Moving to Wednesday, we had left all these entire fair value gaps right there. And overnight, we dropped into one of it, made an expansion, came back down. This was CPI's news event, and then we dropped. Now, because we're maintaining bullishness in this entire frame, we're looking for a 1 hour fair value gap, but we did not find any until we had these lows here, right there. So this and this was the expansion that we had on 1 hour, which CPI basically wicked into. Drop it down into the 15 minutes, you see what we did there. Right about here, you see price expanded, CPI news, came back down. We closed all the candles, created this bearish fair value gap on 15 minutes, right about here. And that was the trade. Taking this short, stop loss was right there. And we're expecting to clear out these lows at the very least. If we drop back to the 1 hour, you see that all price did was reprice this long wick that we had here. You probably see that it was caught in the middle. 1 second, right there. See, that's it. So we tend to trade these wicks like other blocks also. So we try to get the consequent encroachments of that wick, and we can use it as a target. If price had gone below this level, that would have automatically, well, I wouldn't say automatically, but that would have probably changed our buyers into being more bearish. But I mean, except we take out these lows, then is when we become bearish. but we could have gone lower, wicked below this just to sweep liquidity. I mean, this fair value gap is still not fully repriced. We just tapped into it once. We could tap into it again, creating a sweep before we created this expansion. But that was the Wednesday trade. This was a bit dicey for us in our execution because of CPI news. This was a very long candle, so we took a loss actually on this trade, and that's where we caught that for Wednesday. So we had a win on Monday, we had a win on Tuesday. Wednesday was a loss, and back into our 1 hour, 2 p.m. We just, after we got to the midpoint of this week, we just had an expansion, and price just kept on going until we tapped there at overnight. So we closed around here 6 o'clock, here 6, and then we continued up, tapped that high, and then rejected back into the 1 hour fair value gap. And you already know what our process is. Every time we take a bounce off the 1 hour, we are basically dropping to, I'm just going to take this right there, since this is much bigger levels, right there, drop down 15 minutes, and wait for the 15-minute fair value gap. We had this level, we had this level. We were expecting this for our entry, but this got presented. So immediately we created this high, basically this green candle. We had gone into the fair value gap, and then we created the green candle, we closed higher. I'm just going to mark this right there. That's 5 o'clock. We dropped down to the 5 minutes, and we took the 5 minutes fair value gap right there. So you can see this was 5 o'clock candle, 15 minutes close. That was it. And we used this fair value gap. This was the entry that we used right there. Also documented on our Instagram and Discord. That was the entry for the high. Stop loss was here, and our target was the relatively equal highs that we had there, on which we cleaned out easily. That was Thursday's trade, and we're done. You can see today's trade quite straightforward. We had moved into this fair value gap right there. I'm just going to take out these levels so we can see them clearly. This was the fair value gap that we went into on the 1 hour right there. Drop down to the 15 minutes. We had this fair value gap right there, which was a long stop loss, and that was our target right there. So, and that was what today's trade idea looked like. Those were the trade setups for the day, and of course we know that it's a Friday, so we expect that after creating the high of the week, the weekly candle is going to close, which is basically this. This was open, created a low, moved all the way to create a high, and of course the candle is going to close somewhere in here. It would be great if the bodies of the candle close above the high of this, which is this high right there. That will mean that these two highs for next week would definitely be our target. So this and this would be our target, which is basically all-time highs for gold, and we're going to be back in all-time highs territory. That's what we're expecting for next week, really, because price is still bullish. We haven't broken any bullish structures yet. Of course, I would expect us to move lower on Monday, Tuesday, one of those days. Either we'll start moving lower on Monday, or we start moving lower on Monday, and then Tuesday, or move higher on Monday just to claim this liquidity, and then Tuesday we'll move lower just to come back into discounts, and then Wednesday, Thursday, Friday we move higher. So one of those two might play out, but essentially we're expecting higher prices but also understanding that because we left this entire range unpriced, there's possibility for price to come back into equilibrium 0.5 and then discount range, which is these levels. We get back this far because if you look at it also, was one thing that is very prominent in this area. See that? Relative equal lows. So that would be a good liquidity to sweep at the start of the week before we go for this. Yeah, so you can see daily. Perfect. If this candle closes here, it means we have what? A bullish fair value gap right there. I'm just going to clean. I'm going to move this out and then take out this. You can see that in that range that we had for discounts was that bullish fair value gap. Makes sense for price. Monday, Tuesday to come into this fair value gap to go for this. So yeah, that's what we're looking out for next week. That's about it. Thank you. See you next time.